Hello, everyone, and welcome to the BP Learning Channel. Today, we are here to talk about getting a good set of books up and running. Books that will help you manage your business and maximize performance over the long haul. We will focus on 1. Selecting the right QuickBooks Program and Plan. 2. Implementing a chart of accounts that will generate meaningful business reports. And 3. How to properly integrate the QuickBooks system with external systems. This is part 1 of a 3-part workshop series in the Value-Driven Ownership Program, focused on helping entrepreneurs and business owners launch, manage, and exit a business with healthy profits. If you're just starting a business, then please take some time right now and let me help you get your books up and running properly. I'm Debbie, a certified SBDC coach at the Business Incubator Center, a partner with the Colorado Small Business Development Center under the SBA. I am also a former business owner myself, a former CFO for multiple startups in the Silicon Valley, and a CPA with a master's in finance. I have been a business coach for the last 8 years, and unfortunately, most of the clients who come to see me are like Klarissa, a business owner for almost 3 years without making a profit. She lives her life in a frazzled state every day at the office, trying to manage a medical services company. Money is always a challenge for her, and she can never quite figure out why there is never enough money to pay her salary and cover her personal living expenses. If this is you, or you think that it might be you someday, then don't wait until your financial records become a mess. Learn how to choose, implement, and maintain a good finance keeping system today. You start with a systems requirements checklist. What's the checklist all about? Making sure you have what you need in a financial system to manage your business right from the start. Functionality like bank account and credit card reconciliations, bill payment and vendor management, inventory tracking and purchase orders, project and class tracking, payroll processing and reporting, sales tax processing and reporting, and a whole lot more. The good news is that there is a template which can be tailored to meet your needs right under this video. So, hit the spacebar right now, download the file, and keep it someplace nearby so you can take some notes as we move along. You will need to complete this checklist once we are done with this session and before you select a finance keeping system. Let's talk about a software solution now, the QuickBooks Solution, and why QuickBooks is the popular choice for most small business owners. There are some very good reasons for making this choice. Reasons including scalability. A business can grow with this system. Availability of training resources. They are abundant and many are free. Data sharing with business affiliates. Most tax professionals use this program. And versatility. QuickBooks plans integrate with many third-party applications. There are other solutions, of course. You can check them out using your system's requirements checklist. Some of them are even free. But I'm not going to go there with you because I want you to start with the best plan around right now for the money it costs. And right now, that is QuickBooks. Let's take a look at the QuickBooks Programs and Plans. There are 2 programs and 7 plans. We have the online program with 4 plans and the desktop program with 3 plans. Today, unfortunately, there are fewer plans to choose from because in July 2024, Intuit discontinued all desktop plans except for QuickBooks Enterprise and increased pricing for all the remaining plans. Like it or not, and some people don't, these are the choices we have today. But I still believe one of them is the best solution for most small companies. Big picture, pricing scales with the number and type of available features, and like almost everything else in this world, the more you pay, the more you get. Let's take a look at the numbers now. First, the online plans. Simple Start for $420. Essentials for $780. Plus for $1188 and Advanced for $2820. The desktop plans include the Gold plan for $1922, Platinum for $2363, and the Diamond plan for $4668. Note that each of the desktop plans now has a cloud access option for an additional fee. You can take a look at the features in each program and plan on a comparative basis in my reference guide called Getting Your Books Up and Running. My recommendations are almost always based upon features that help most companies thrive and grow and maximize performance. Thus, with respect to online plans, my choice is Online Plus because I believe every company needs the option to track profitability by project, by class, which means by unit, location, department, and more, and by sales channels, multiple ones. With respect to desktop plans, my choice is always a desktop enterprise plan if you are a contractor with work and process requirements, a business with multiple companies, or a company with significant inventory requirements. The online plans do not handle work and process elegantly. They do not handle order fulfillment, management of fulfillment centers, or company consolidations. I know it costs more for the software, but it will probably save you money over the long haul. It has much better management tools. Okay, at this point, you have a systems requirement checklist and a whole lot of information about the QuickBooks programs and plans, including a reference guide with instructions. Let's move on now and talk about the chart of accounts, the heart of the finance system. It consists of a list of accounts used to categorize financial transactions and produce management reports that measure profitability and value. The structure is fairly simple. There are 5 different account types. These types are a means of grouping accounts under proper headings for financial reports: assets, liabilities, equity, revenue or income, and expenses. They cannot be changed. They are a means of preserving the integrity of generally accepted accounting principles in the business world. Each account type has accounts: parent accounts with no transactions in them, and sub-accounts with multiple transactions in them. Each account has 4 elements: account descriptions, account numbers if desired, tax line item mapping if desired, and security. Each account can also be tracked using account features, class, and job or project code. If account type and accounts are used properly, you will be able to generate reports containing valuable information regarding the performance of your business. Let's take a closer look at accounts now. Let's look at the structure of some actual accounts. In this example, we have a parent account called Auto and 3 sub-accounts: insurance, fuel, and maintenance. Each account has an account type called expense and an account description to help you label transactions with proper accounts. In this case, we have a parent account, Auto, with 3 sub-accounts. Each of these accounts has the same basic elements: account descriptions, account numbers, tax line mapping, and security. They also have 3 important account features: class tracking, job code assignments, and tagging. Next up, more about account types and features. Yes, there's more to understand about these accounts, so let's dig a little bit deeper into types and features. Account types allow you to designate where transactions will appear in reports. Account detail types helps you choose the correct type of account. It is merely helpful information, so use descriptions that will prompt you to label a transaction properly. Utility accounts contain automated functions that allow you to pay vendors, collect money from customers, track your inventory, and more. Features include class, job, and tagging that allow additional tracking of important information. We will see an example of all of this a little bit later. Next up, more about utility accounts. Utility accounts are absolutely wonderful and absolutely dangerous at the very same time. They provide automated functionality that streamlines your business operations. That's the wonderful part. But if not used properly, your books can become a great big mess overnight. And that's the dangerous part. It's important to learn how to use these accounts properly. There are no journal entries in these accounts. I am going to introduce you to them briefly and describe the automated function each one provides. Bank accounts and credit card accounts with the proper web-based connection allow you to download transactions and reconcile the accounts. Accounts receivable, when set up properly, allows you to send customer invoices automatically via email, enter customer receipts using a deposit function and run reports. Accounts payable, again, if set up properly, allows you to pay vendors and process purchase orders. An account called inventory asset allows you to automatically record purchases in inventory and then take these items back out when they are sold. We will talk more about this later. Next is retained earnings. This is a place where income and expense accounts are automatically closed annually. And last is an account called undeposited funds, a temporary holding place for deposits. Let's move on now to classes, jobs, and tagging. I like to think of this as creative performance tracking. We will walk through an example for a residential home builder so I can show you how all three of these features work. I will start with class. In this example, I want to monitor profitability for 3 regions: the West Coast, the Central Valley, and the Southwest. I also want to measure performance for housing based upon the price of the home, so I will use job type to do this: low income, medium price, and luxury. And finally, I want to measure performance based upon the type of the home, so I will use tag to do this: single family, townhomes, and condominiums. And now that I have tracked all this information, I am able to run balance sheet and income statement reports by class, by job, and tag. Powerful information to manage performance in a business. Let's talk about how accounts create reports now. We will start with the balance sheet, the assessment of value in a business. Reports are created using categories, which group items of the same type. Notice, there are categories and subcategories. We have 3 categories: assets, liabilities, and equity. We also have 4 subcategories: 2 current subcategories, a grouping of current assets and current liability accounts, and 2 long-term subcategories, a grouping of long-term assets and long-term liability accounts. Next are the account types. We have 3 current asset types: bank, accounts receivable, and other, and 3 current liability types: accounts payable, credit card, and other, and 2 long-term types: fixed assets, which might include accounts like equipment, furniture, and vehicles, and long-term liabilities. These will be your loan accounts. And finally, we have 1 equity type. This will include accounts like stock or capital contributions, dividends or distributions, and retained earnings. When you put all this information together, you have a value report or balance sheet, which allows you to measure value in various forms: liquidity ratios, debt ratios, equity ratios, and a whole lot more. Let's take a look at how the income statement works now, also called the profit and loss statement. The income statement is an assessment of business performance. Once again, Categories group items of the same account type. In this case, there are 5 of them: income, cost of goods sold, expenses, other income, and other expense. There are also 5 account types: income and cost of goods sold, expenses, other income, and other expense. Note, in this simplified income statement, categories are the same as account types. This will not always be the case, however, so don't be surprised if your income statement looks a little bit different than this one. It will still contain the same valuable information. You will be able to easily analyze 3 different margins: gross margin, net operating margin, and net income margin. At this point, we have gone through the basic mechanics of how a chart of accounts works. Most importantly, how it creates reports. I want to spend a few minutes now talking about technology and how it has transformed the finance keeping world. We have already talked about QuickBooks, a relatively inexpensive, automated main ledger system for small to medium-sized businesses, which has been around for 30 plus years. It's powerful, but let's talk about the interfaces with external systems that QuickBooks has: web-based interfaces and independent subledgers. Web-based utility consists of automatic downloads or feeds into the QuickBooks main ledger system from banks and credit card merchants. Independent subledger utility includes automatic synchronization, or sometimes manual journal entry of data processed in fully functioning independent software related to sales or a point of sale system, payroll, inventory, and a whole lot more. We will just talk about 3 of them today. Web-based interfaces pertain to bank accounts, including merchant bank accounts and credit cards. Users must set up a link to the bank or the credit card company inside of QuickBooks, download transactions periodically, code the transactions, and reconcile the accounts monthly. Let's look at how some actual transactions might download into QuickBooks: the purchase of office and kitchen supplies. We will look at 2 entries, a cash entry and a credit card entry. In both cases, the total amount of the transaction downloads into the main account, the bank account in the cash transaction, and the credit card liability account in the credit transaction. You must then enter the remaining accounts manually. QuickBooks will prompt you. Next up on the agenda are payroll transactions. Let's take a high-level peek at how payroll works when using the QuickBooks payroll system versus an external system like ADP or Paychex. We will look at payroll checks and payroll taxes. In QuickBooks, payroll checks post into accounts correctly each payroll period, usually 10 accounts or more. Payroll taxes also post into proper accounts each period, and regulatory reports are processed and filed automatically directly out of QuickBooks. External systems can be used, and most of them are compatible with QuickBooks, but amounts usually download net into 2 accounts: cash and salaries and wages. A manual journal entry is required to gross up salaries and wages and record withholding and employer taxes in the proper accounts. Since payroll tax transactions download net, a manual entry is required to properly post accounts. Similar to QuickBooks, tax reports are filed automatically. If an external system is used, manual entries should be made at least monthly to properly adjust accounts. If this isn't done until year end, management reports are not accurate. Point of sales and inventory systems are critical subledger systems as they provide important profitability information. Square, Clover, Shopify, to name a few of the popular ones. First, let me say that I love these powerful systems because they can be used on the go, at markets and events. They contain valuable data not in QuickBooks. They are generally easy to use, and they can be a cost-effective solution to tracking sales and inventory. At the same time, however, these systems can be dangerous because transactions may download into QuickBooks Net, so adjustments are required. Adjustments that users may not even know are required, much less how to make them. Or transactions may come down in more detail than you want, so it can be messy if you don't understand how it works. Downloads may also impact bank reconciliations because a merchant bank is involved, and cost of sale adjustments are usually required. Adjustments that, once again, users may not know are required or know how to make. These are powerful systems, there's no doubt about it, but they are also dangerous systems. Stay away from automatic synchronization unless you completely understand how it works. Instead, make a monthly manual entry using reports to get the data into QuickBooks. That's a whole lot of information, a lot of good stuff. Let's reinforce this material with a homework assignment, and then you will choose a QuickBooks Program and Plan. In part 1 of this assignment, we will answer some questions about functionality. What is an account type and why is it important? What is a utility account and why are they dangerous? And why are subledger systems both powerful and dangerous? In part 2 of this assignment, you will do some analysis and make a plan selection. You will complete the systems requirement checklist, select a program and plan, and list 3 reasons why you made this choice. Take your time. This is a very important decision, and don't run off and buy the plan until you talk with a coach. And that's it for today. But before you go, I want to plant a few seeds so you don't end up like my friend Klarissa. Big picture. If you want a business that will thrive and grow, if you really want to make some money, maximize business performance, that's what VDOP is all about. I want to leave you with these 3 thoughts today. 1, don't be afraid to spend the money required for a good financial system right up front, one that meets all your financial needs. It will save you money and heartache in the long haul. 2. Set up a good chart of accounts using the class, job, and tagging system available in QuickBooks, so you have a good management reporting system. And 3. Explore the use of external systems, subledgers. But before you decide to use one of these, make sure you understand how it interfaces with QuickBooks. Set it up right and use it correctly. Learn a lesson from Klarissa. Get a good finance keeping system up and running today. Next time, we will build on this knowledge. We will talk about all of the gotchas that got Klarissa into a whole lot of trouble. In the meantime, make sure you subscribe to the BP channel below, and I'll see you soon for another learning session together.